Welcome to the Imperium Forex Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, silver took a slight tumble overnight as the market retreats from that $16.15 resistance. Currently holding above $15.60, I do expect to see the bulls to return. With the bullish divergence currently still holding, expect to see a move towards $16.15 and higher to eventually reach a target that comes in around $16.50 and reassess from there. Although I'd still expect to see the bulls to defend the $15.60, if breached, could see a slip towards $15.20. But this view is unlikely due to the fact that the gold outlook also holds to a bullish potential move. When we look at gold, you can clearly see that the two lows that come through from the price, the indicator is still holding very much to bullish divergence. Therefore, I expect to see a snap to the upside and clearing the resistance of 25 and looking on towards 1,229 to 32. In light of the bullish divergence, if it does kick in very aggressively, could see a move beyond 32 and up towards 45. And this would help silver rally on towards its $16.15. On the day, I'm a buyer of dips, and I look towards either 1,215 to 1,209 as a potential demand zone. Well, the Australian dollar is attempting to try and challenge this level of 77.40 after recording a high of 44. In light of the recent comments from Janet Yellen, whose remarks to the US Senate Banking Committee signaled the Fed was neither in a rush to raise interest rates nor interested in taking them very high at this moment. Additional to this, on Thursday, better than expected Chinese trade figures indicated stronger foreign demand for the country's goods, as well as a resilient domestic demand. Therefore, this has helped the Australian dollar, as well with the weaker greenback. The market could actually now clear this level of 44. Now, it is a big technical level. If you look at the weeklies, you can see that the market clearly over a period of two years has fouled towards this level, so it is a big level. However, if we break it, then we could see further scope to the upside to 77.90 to a high of 78.45 before turning around. However, the indicators are not as bullish, so we may see another failed attempt. So let's see how it plays out in the next 24 hours. Well, the euro, since retreating from that 114.85 resistance, has held to a relatively negative bias. Although we have seen the support at 113.80 weaken, overall we haven't seen further breakdown as of yet. However, from the technical implications, we could see a move today towards 113.65 as minor, and then beneath there would reopen the downside to 113.15 to 30 to 112.40.45. Out tonight in the US, we have the US retail sales and also the CPI figure, so keep an eye on that. Moving on to dollar yen, well, the market at this stage is still holding to a slightly negative outlook, even though we did get down towards 112.70.80 overnight, with the low being 85 before rebounding. In light of the downtrend, and also these indicators are unwinding out of an overbought situation, could see another retest towards that 112.70.80 and reassess from there, as a break beneath there would reopen the downside to 111.80 to 112.10. However, the longer that we remain above 112.70.80 could eventually see the market respond to a bullish move and look back towards those recent highs around 114.40, which was the high seen earlier this year back in April-May. And to wrap up with sterling, well, the market is attempting to recover after the recent comments overnight. Were very interesting to see that the Bank of England's Monetary Policy Committee, McCarthy, after the recent hawkish remarks that we saw from Michael Saunders recently, the Bank of England MPC McCarthy spoke on to saying that he looks to start beginning the unwinding of the QE sooner than currently anticipated. Although my view at the moment technically has been bearish towards 129.65, the market still has a big task ahead of itself to try and take out the level of 130.45. In light of the pattern, I expect to see them eventually the bears to return and look towards that 128.60, with the initial objective still remaining at 127.70 to 85. So that brings an end to my webinar. Thank you very much for joining me, and keep an eye out for the report that will be released shortly, and I hope you have a wonderful day and a great start to the weekend.